Hello, and welcome to News Take. My name is David Chavern. I'm the president and CEO of the News Media Alliance. Recently, it's become clear that we're reaching a real inflection point. I always call it a bend in the river when it comes to technology, particularly around advertising and content delivery. And I think it's always a good time to re-examine where we are, how we got here, and where we might go. In particular, search engine algorithms have shaped the online publishing ecosystem for years, and often in ways people don't understand. And determining what content audiences see, also how they consume information and where they spend their money and share their data. It is vital that we understand how these systems work, how we might benefit from them, or understand how they're not benefiting us. And to that point, I'm really excited to be joined today by Rand Fishkin. Rand is co-founder and CEO of SparkToro, a software company that provides unique audience research and insights, aggregating from tens of millions of verifiable public social and web profiles. He makes channels outside of Facebook and Google accessible to everyone. Rand started SparkToro in 2018 with Casey Henry. Prior to that, he was CEO of Moz, where he raised 2 rounds of funding, led 3 acquisitions and a rebrand. From 2007 to 2014, he grew the company to over 130 employees, more than 30 million in revenue, and web traffic to cover 30 million visitors a year. He's dedicated his professional life to helping people do better marketing through his writing, videos, and speaking, and his book, Lost and Founder. Rand previously co-contributed to 2 other books, Art of CEO and Inbound Marketing and SEO. He's been profiled in the Seattle Times, good member of ours, by the way, featured in Puget Sound Business Journal's 40 Under 40, named to Business Week's 30 Under 30, written about in Newsweek, The Next Web, Inc. 500, and really hundreds of other publications. Rand, thank you so much for being here today. We really, really appreciate it.
Thanks for having me, David. Great to be here.
Tell us a little bit about your story. How did you, where you're from? Tell us, your progression in your career, and frankly, how you got into this, incredibly interesting and somewhat strange business of, marketing and technology.
Sure. Yeah. So I'm from Seattle, Washington, out here in the Pacific Northwest, and dropped out of the University of Washington in my senior year, just a few classes away from graduating, to start working with my mom, Jillian, who was my co-founder on the company that became Moz. And initially that was a, web design business, and then an SEO consulting business, search engine optimization, then became a software company, which I led for many years. As you mentioned, David, raised some rounds of venture capital, which comes with a lot of pressure to grow very quickly and show certain kinds of metrics and returns. Yep. We were relatively successful for a long time, growing 100% year over year for 7-8 years in a row. I actually had a deep bout with depression in 2014 and stepped down from the CEO role. I stayed at the company a few more years, but continued to have struggles and challenges with the new leadership team. Yeah. And left the company in 2018 and started SparkToro the very next day.
Wow.
So that was quite a journey, but definitely an interesting one. And for SparkToro, decided that I wanted to, I had a non-compete with Moz, which meant that I could not be in the search engine optimization space at all anymore, which was fine. I think it was an interesting time to move on regardless. And so, Casey and I, my co-founder and I at SparkToro, had this idea that we could, by crawling and indexing public social data, public profiles from people across, LinkedIn and Twitter and Facebook and Reddit and YouTube and all the others, that we could build very interesting data sets around anyone on the web, any describable group of people. So if you were interested in science fiction authors in Canada, and you wanted to know what podcasts they listen to and what YouTube channels are they subscribed to, what websites do they visit, who do they follow on social media channels, what press do they read? Well, that's really hard information to get. You could survey an interview, but those answers are not great. No. But if you visit someone's YouTube page, it'll show you all the YouTube channels that they subscribe to, assuming their profile is public.
Yeah.
If you go to their Twitter page, it'll show you everyone that they follow. If you go to their Facebook, it'll show you every group they're part of. If you go to their Instagram, it'll show you what they follow there. And you can see the hashtags that they use. You can see the words and phrases they use to describe themselves and their about and their profile. And this is the data that if a profile is public and if Google can crawl it, then SparkToro can crawl it as well. We aggregate and anonymize that information and then make it searchable. This company has been running, just about 4 years, although the product's only been live for 2. And we're building it in a really, really different way. So whereas Moz was, venture backed, very much hyper growth focused, not a lot of sleep, definitely a lot of 20 and 30 somethings pounding their brains out. This business is the opposite. We take a chill work approach to our jobs, and we have a sort of a mandate that we don't want to worry about having to put in more than 30 hours a week. We can if we want, but we try not to. There's only 3 of us. It's a tiny little team, very little management overhead, and a super different approach to the business of building a tech company.
That's so cool. I want to ask you about the chill work approach, by the way. There's been some articles about that. I thought it was really interesting.
Yeah.
We're going to talk more about that. Although, also, I want to pause and say thank you. I mean, talking about personal struggles at times in your life is really important. It's really important for all of us, and we have to normalize our collective capacity for doing that. So I just want to stop and say thank you for doing that. That's really important for all of us. Getting back to the business, let's talk a little bit about algorithms and how they function now and how they used to function. Frankly, for all of the public discussion or Twitter discussion about algorithms and algorithmic implications, I actually think that, they don't get talked about enough at some core level. And I can talk about the implications for news publishers, but just talk about the evolution of how you've seen, how Google has changed over time. Have you seen the evolution of all of the decisions made for how to serve you content? Or it could be anybody, but how individuals are exposed to content, and how that's frankly just changed over the course of your career so far. What have you seen in terms of how algorithmic processing has changed?
Sure. I mean, there's a tremendous amount to go through here. I think the short version that's most salient and probably interesting for news publishers is to think about the 2 major powerhouses. Let me amend that. 3 major powerhouses of the web that control an overwhelming proportion of our traffic. And that is Google. It's then Facebook and the other social media networks and platforms. That would include places like Twitter and LinkedIn, which are particularly important in B2B and for journalists themselves. And then places like TikTok and Instagram and others. And then the third one is what I would call content networks. So Reddit has become a content network and one of the biggest sites on the web. YouTube is one of the largest traffic drawers on the web, and clearly a content network, more so than a social network. And those 3, right, if you sort of divide them up, really own and control the vast majority of information sharing, information consumption, entertainment, news as entertainment, fighting with other people about the news as entertainment, those sorts of things. And I think the algorithms can explain a lot, but even more important than the algorithms are the incentives. So the incentives, when I started in this business, I'm sure, when you and I were a little less gray, were very different from how they are today, right? Google expressly stated, the Larry Page and Sergey Brin, right, in the early years of Google, they talked about how important it was for people to come to Google and then get off of Google, to go away to other websites. That was their whole goal. They said, we're not like, AOL. We're not like Yahoo. We're not trying to keep you on Google. We're trying to send people to the websites that deliver quality information, that answer the search queries that they have. and I did some interesting
How'd that
research.
go?
Yeah, I did some interesting research a few years ago, David, that received actually a lot of attention in a tremendous number of publications, got cited by Congress and covered in every major press you can imagine.
Cited by us, by the way.
Yes.
Yeah.
And that was around what I've termed zero-click searches. Mm-hmm. So zero-click searches are essentially when you search on Google and you get a piece of information back from Google that does not take you anywhere on the open web. It keeps you inside of Google's user interface and inside their search engine and answers your query. As a user of Google, I think it's very hard to argue this is anything but, wow, that's really fast and awesome, and I love it. It's just kind of great. I can search for weather in Ballard and Google tells me what the weather is going to be. I don't have to click on anybody's website. I don't have to see any ads. I don't, I'm not I don't have to accept any cookies, anything like that. I can search for color picker and Google will show me a built-in color picker. I can be in the backseat of my brother-in-law's car with my nephews and search for animal sounds, and Google will play me all sorts of animal sounds. It's just I never have to leave Google. And this has been something that Google's been investing in very, very significantly over the past 10 years. This zero-click searches thing has grown so significantly that in 2020, the last time I did this research, 2/3 of all searches that started on Google across mobile and desktop ended without a click. No, those searchers, 2/3 of those searchers never clicked on any other result, which is pretty incredible and also very concerning, right? If you are a news publisher, you might have gotten, millions of visits in the past from people searching for actors' names or searching for particular people who are in the news. How old is Barack Obama? Right. Now Google gives you a little snippet that Google doesn't editorially create that content. They have no one who works there who answers all these queries. They don't have any journalists or content creators. They scrape your content and put it into their search engine as an instant answer. And they do this by aggregating lots of people. So that, they'll visit Wikipedia and the New York Times and the Wall Street Journal and 1,500 other publications that they like and trust. And then they'll aggregate, oh, okay, well, it looks like this all says that Barack Obama was born in this particular year. So we can basically source that data algorithmically and then show it to the user collectively. And they do this across, healthcare information. They do it across weather. They do it across sports scores, you name it. This has a parallel in the social media universe, which I'm sure you can think of, right? In the early years of Facebook drove so much traffic to news sites, right? Journalists were constantly thinking, okay, how do I put together, something that's sort of clickbaity that can drive traffic from Facebook? I mean, BuzzFeed essentially built its entire business on driving traffic from Facebook. Yeah. Twitter was part of this as well. LinkedIn could be part of this, especially if you're in B2B. Reddit was part of this. Dig, which fell apart, of course, was part of this. And dozens of other platforms. And today, every one of those, Instagram, LinkedIn, Reddit, TikTok, Twitter, Facebook, you name it, their algorithms all promote and are biased toward content that will keep you on the network, right? Because that's how they earn their money. They earn their money through keeping people, not sending them out. And this is why so much of the web's activity is now concentrated in about a dozen places.
Yeah, it's so interesting. One of the ridiculous arguments of many that I get into is there's this easy, really kind of old assumption that what we're really fighting about is ad dollars, right? That we used to have a lot of ad dollars and Google and Facebook now have the ad dollars and we somehow want that back, right? And I've by the way, I've never once made that argument, and I think it's a kind of absurd argument that they would ever make it. Our big complaint is really along the lines of what you described, which is we create professional, high quality content, which, by the way, is expensive. There's no way to make it cheap. It is by its nature expensive.
I mean, the
Also,
cheap way is to steal it from you.
yeah, exactly.
And
It
Google's
also,
great at that.
our content also has this little side benefit of maintaining democracy, which is, I think, a plus.
Little
Uh,
side benefit.
yeah,
I
but
mean, TikTok's not particularly interested in that, but yeah, okay.
well, we're going to talk about TikTok. But and then that content is then put through a meat grinder of it is scraped. It is used to answer queries with no click searches, as you describe. The data of our customers is taken from around it. It's been used for stuff like natural language training on,
That's right.
which was, by the way, never licensed use of our content. It is used. It is this, valuable input that is then put through a meat grinder. A lot of value is extracted that doesn't come back to us. And interestingly, to the point you described, the argument we always get from Google is, oh, but we're sending you all this traffic. And really, what you kind of describe is also, yeah, but that doesn't note all the traffic we would have gotten, but we don't anymore.
So I like to describe this. I for a long time, for several years, I gave a presentation called "The Trojan Horsing of the Web,"
Yeah.
and this was essentially Facebook and Google primarily, but some other providers as well, using the argument of, we'll send you lots of traffic if you let us crawl and index your content, and you sort of, buy into all of our systems, and you adopt our protocols, and you agree to be part of our systems. And that was a great deal for a lot of people in the early parts of the web. And then it became a Trojan horse and a prisoner's dilemma. Yeah. Because today, Google says, well, would you like the table scraps that we're willing to feed you, or would you prefer that those go to your competitors?
Yeah.
Because that's all that we're offering anymore. And we already are, I think they're the second largest lobbying organization in the United States. They were successfully able to shut down the recent Klobuchar initiative to regulate big tech and to prevent them from self-preferencing behaviors, which is an incredibly impressive campaign, right? So most of the Senate, including the Republicans, right? Republicans and Democrats alike supported it, and Google managed to tank it anyway with just some smart payments to the right people's children and that kind of thing. So we sort of live in this world where Google and Facebook's power is very difficult to regulate. And because of the deals that they made in the early parts of the web, right? Don't regulate us, let us crawl and index information, we'll send you traffic. And then not realizing, I think, what the long term looked like, every publisher bought into this. And of course, the competitive landscape meant that no one was really able to opt out of that successfully.
Yeah, that's a whole nother podcast where I can talk to you about the sort of wall of advocacy that Google in particular, but the other, Facebook as well, create to make it seem like it's coming from a lot of places, and it's coming from one place. But let's talk about then, let's pivot to your business a little bit. How do you help people with this dilemma? First of all, I know full well the news publisher sets of issues, but maybe talk for a minute about other kinds of businesses that suffer in this world. Sure. You've noted a couple of them, and then what do you do to help them with it, or what are strategies they can use to try to address it?
Yeah, so I think the core value proposition of SparkToro itself is gain a deep understanding of any online audience in just a few minutes, right? So whereas before we saw some very clever marketing agencies and in-house marketing and market research teams who would try and understand a group of people online. Like, let's say that you and I, David, we started a publishing company in the RVing world, right? So we said, oh gosh, there's not a lot of people servicing the RV community in this sorts of ways, and maybe everyone who's in that space is serving a much older demographic. Let's take a look at all the the young and middle-aged folks who are in RV world, and we're going to try and create a great publication for them. I don't know anything about RVing. I don't know if you do, but
No.
it's just, it's a black box to me. So I think very reasonably a good thing for us to do would be to survey and interview a lot of folks and try and get some understanding of the behaviors and interests and all those kind of things. But also we would want to validate that at scale. What I'd really love to do is, go visit 10,000 profiles of people who are deeply interested in RVing, and they tweet about it and they post about it on Facebook, and they're part of the Go RVing subreddit and all that kind of stuff. But it is absolutely unfeasible to visit all of those, follow all those people, learn from them, aggregate all their information together. You need software to do that, right? Mm-hmm. So we could build a crawler to go crawl them all, and then pull out every word that they use, and then see how many times they talk about this topic or that topic. And this is where SparkToro is really helpful, right? Because I can just search for my audience frequently talks about RVs, or my audience follows the subreddit Go RVing. And then boom, okay, here's 58,000 people who are subscribed to the subreddit Go RVing. And here's what else they visit on the web. And here's the YouTube channels they subscribe to and the podcast that they're into. Hey, we could sponsor that podcast. You and I should be guests on that podcast. If we could be guests on that podcast, we would probably bring a lot of people from the RV world into our world. And turns out lots of people in RVing listen to podcasts because they're on the road, right? Yeah. What else are you going to do while you're driving? And all of this kind of information, where to do your marketing, how to reach your audience, what messages resonate with them, who's having success, what types of content they're talking about and topics. All of that is incredibly helpful, because the only alternative, and the alternative that 90% of ad dollars go to right now, is Facebook and Google, or if you're in e-commerce, Amazon, right? You just throw money at those channels and you let them sort out all the targeting for you. You say, Facebook, go find me people who are interested in RVing. And then Facebook essentially, and Google as well, and Amazon, their entire goal is to say, all right, this customer is worth $1 to you. We're going to charge you 99.5 cents to get them, right?
Just enough to keep you alive, right? It's just a drip of water.
Yeah, enough to keep you alive. Or if you're, venture-backed, investor-backed, let's charge you $2 because you can afford to lose money on this for a long time. and in many sectors, you do see that, right? There's a negative return on ad spend, but because those companies are incentivized by growth, not profitability, this is true in public market companies too, they'll pay, right? They'll overpay to get those. My other argument, which I think is extremely frustrating, and any of your listeners who've done digital advertising have surely encountered this, is Google and Facebook are happy to take credit for a lot of sales that would have happened anyway.
Oh, yeah. Yep.
So that incrementality is really tough. So basically, my position is, how do we help marketers find the sources of influence that their audience pays attention to outside of these big ecosystems? Because we think that's not only good for the advertiser, it's good for the publisher too. Yep. If you've built a great audience, you should have people coming to you who want to reach that audience. You shouldn't have to participate in Google's extremely low payout advertising network, or Facebook's, or, put all your content on TikTok for free. Those mechanisms for driving revenue, we think, are fundamentally biased and unfair.
By the way, can we do a little segue on TikTok? I just like your reactions and how you think about their sort of role in the ecosystem. So a couple of things. I mean, one of the things clear is they're taking a huge amount of attention, right? They're, minutes per day. If you're in an attention business, they're taking a big slice of the pie. And also interesting, if you look at it from an algorithm SEO perspective, first of all, it's all algorithm. It is a pure algorithm product that seems difficult to influence in some way. There was a Charlie Warsaw piece this week where they were talking about how it's not clear how influencers progress on TikTok, because influencers on YouTube have a pretty clear path to grow a big audience, and then sometimes they can even export that audience to other places if you want to go find them there. Yeah. Whereas it's not clear as influencers get more popular, what might TikTok do with the algorithm to sort of keep that in a kind of precarious position. And I have no idea whether they do that or not. One of the things we all know is we have no idea at all as to essentially how that algorithm works. How are you thinking about TikTok as a now growing place of human attention? And what does that mean for your clients or anybody who you deal with, who does it well, who doesn't do it well, or risk of benefits?
Yeah. So let's see. Interestingly, I think of TikTok, and I think that a lot of people who study it think of it currently as an entertainment network more so than a content or social media network. So it is the place of the social networks. It is the place where almost no one follows friends or
Yep.
family or people that they know personally. Almost everything that you're shown, almost everything that people end up following and subscribing to is almost exclusively for entertainment and or information around a personal passion, hobby, lifestyle,
Yep.
set of interests. So things like the classic things that built the sort of influencer world on Instagram: fitness, travel, food, health, those sorts of things, beauty products, those sorts of things. Those build audiences on TikTok, and they get a lot of attention. Outside of those, much less so. TikTok also, to your point, I think you nailed it exactly, David, right? They have built a system whereby it is both difficult to earn and grow an audience, and earning and growing subscribers does not mean that your content will be seen by them. In fact, TikTok, more so than any other network, has a low correlation between number of subscribers that you have and quantity of engagement that you get from those subscribers.
Interesting.
So the value of building an audience on TikTok is actually much lower than other platforms. And that includes Facebook, which is a very low, very low reach type of place. If you have lots of followers of your Facebook page and you post stuff to it, on average, I think Rival IQ, which is a company here in Seattle, they sort of study and average out tens of thousands of pages and how they perform across social networks. I believe it was 0.05% is the median engagement rate on Facebook. So,
wow.
Yeah. If you have 1,000 fans of your Facebook page, on average, 5 of them will engage with any given post, and maybe 50 will see it. It's really bad, and TikTok is even worse.
Fascinating.
So, I think as someone who's interested in how do we help publishers grow audiences, how do we help marketers find places to reach their audience, to be honest, SparkToro has stayed entirely away from TikTok, and not just for this reason. I also have deep concerns about TikTok's ownership and the incentives and motivations of the parties that own TikTok and what their true goals are. You could see a story this morning, right, that TikTok is losing an extraordinary amount of money growing as fast as they are and trying to, become an addictive product to most of the Western world. I'm not quite clear, right? They don't function in sort of a classic, like I know what Mark Zuckerberg wants.
Yeah.
He would like to make more money, right? And generally speaking, he would like Facebook to be a leader in its space, to make the most money it possibly can, to grow as fast as it can. And he would like to keep the United States and most Western democracies functioning as they currently are in order to see his goals achieved. And I think TikTok's owners have neither of those goals. And so I have my, sort of existential concerns about, is that a good place to be participating? Is it a good thing to be a part of? Do I want to, be reliant on their data to power our product? Right now, the answers for me are no.
Yeah, it's so interesting. I was at Code Conference a couple weeks ago, and there's a lot of discussion about TikTok, and a big part of it was, again, just the clarity of how much attention is going to the product, which startles people who are
Yeah.
in the attention business, right?
I mean,
uh,
what's interesting is TikTok right now looks like it is cannibalizing Netflix,
yeah.
Amazon, Disney Plus, Hulu, far more than it's cannibalizing Instagram, LinkedIn, Twitter, Reddit, YouTube. So it really is replacing, I think, for a lot of people, especially a lot of people under 30 and growing in the 30
Yeah.
to 50 demographic as well. It's replacing entertainment time, right? Instead of, hey, let's watch the latest show on TV. Let's see how, Better Call Saul is going. Let's just watch 50, 20-second long videos on TikTok.
Yeah, and there's I have to tell you there was we going back in the past there was probably I don't know 2015 2016 when all of a sudden there was a lot of clarity that essentially all digital advertising growth was going to Google and Facebook. This is when the
Yeah.
duopoly term that they hate was framed, right? Everybody was thought, whoa, internet advertising supported, yay. And then there was sort of a moment of clarity where people were like, oh, no, it's not everybody gets to win, right? Just a couple people get to win. And there seems to be this moment of clarity now with just what you described, the attention draw, the gravity well from TikTok that I think is startling to people. And then underlying that is again sort of trying to understand the financial business decisions. Evan Spiegel talked about this a lot about the spend that went into acquiring those initial users, and then the advantages that gives you in terms of data and behavior and embedding is just that part is kind of startling, right? So all of a sudden you're getting a lot of kind of serious anxiety because part of it is people didn't see it coming, right? And what does that mean if they didn't see it coming? So good. I want to get to the chill work here at the end, but I got one other question for you in this space that I think we have to get to, which is privacy, ATT, third party cookie deprecation. Um, we're assuming, and I think most of us are assuming, we're moving towards worlds in which third party data is much more constrained. And there's which as a corollary, by the way, puts a big emphasis on quote unquote first party data and who gets to claim that. Google always likes to claim that all data is their first party data, but who gets to claim that and the values attached to it. But there's often a set of complaints that small companies, small publishers, small enterprises are disproportionately hurt by this. I'm not sure I buy that argument myself, but I'd be really curious as to how you think about sort of where the trends are in terms of data and privacy and how that plays out for enterprises of all sizes.
Yeah. Yeah. So let's see. First off, I think the death of cookies has been a little bit overblown. We've been talking about it for 5 or 6 years now.
Yeah,
Google
they never
keeps
seem to die.
no, and I don't think they will. I think the name will change, but the functionality will remain extremely similar because there's too many billions of dollars of ad revenue, especially in retargeting and follow people around the web and being able to aggregate their behavior and knowing what they're going to do. That is too valuable to the people who currently own and control the web, the duopoly, triopoly of Google, Facebook, Amazon. Um, one interesting thing is that's happening right now is that Apple has taken away a lot of cookie data and tracking data, especially from Facebook, but from Google as well. And of course, they've turned that into Apple's own advertising business. So in the years to come, Apple will soon have an incentive as well to maintain this trackability, as opposed to the sort of privacy push that they've claimed to be on, which was never authentic and never came from a good place. I think if you trust a big tech company to be interested in your privacy, you're, oh man, I got a bridge to sell you. And the the interesting thing about this from a publisher standpoint is every change around this, where essentially I wouldn't say cookie data or tracking data is going away. It's just going to exclusively big tech and not to you, right? So they're taking away, years ago, Google used to tell you all the keywords that sent you traffic,
Right.
and you could do lots of useful, wonderful things for the web and for users with that data. I can't think of there ever being a privacy concern that actually ended up being meaningful or salient from that, despite, working for 17 years. But Google claimed it would be a problem, and so they took away the data unless you pay them, right? Unless
Yeah.
you pay. If you're buying Google ads, then they're happy to tell you, oh yeah, well, this person came with this keyword, they clicked on this ad, they landed on this page, they transacted here. So I think that what's important to realize is that the value of first party data, zero party data, owning and controlling your tech stack, being able to collect an email address and having users log into your website, and using that information to power a lot of your content, your marketing, whatever conversions you're trying to seek out. That value continues to increase. And it's frustrating to me that a lot of business owners of all kinds are letting other companies control this, right? They're putting all
Yeah.
their content on, hey, you know what? We'll just let Google figure this out. We'll let Facebook figure it out. We'll let TikTok figure it out. We'll put all our content in all these places. We know we won't be able to track things. I'm not sure that's the right balance. To my mind, the thing to do is invest even harder on all the things that exist on your own website, own and control as much of your traffic as you can, and focus on email. Email is the one protocol that over the last 25 years has remained in the hands of small business owners and publishers.
Yeah, really, really good, really thoughtful. So, as we end here, tell us a little more about chill work, your whole theory
Sure.
about that, and how how we should think about applying that every day.
Yeah. So my experience, David, from the venture-backed world was I had what I thought were very good investors, very empathetic, thoughtful, kind, friendly. I think they're good people, but they exist in a universe of incentives that don't align with my personal philosophy and what I want to do in life. And that is, essentially the model of venture capital and venture investment, and almost all the angels who participate in the venture ecosystem is, let's invest in 1,000 companies. 950 of them are going to die trying, right? All their employees will be laid off. The founders, won't make any money at all. Maybe a micro acquisition, and then a few of those companies, maybe another 45 will do okay. They'll make between, I don't know, 3 and 5 times their money back. And then we'll have a few what they call home runs, right? Big companies that become, market dominating forces, monopolies in their spaces, push out all the other competition, grow rapidly enough to be worth, billions of dollars. And that's going to make the whole portfolio. That makes up for all the losses. And I hate this model from a macro standpoint, because I don't want to see a few winners and lots of losers. I want a lot of medium scale winners, right? That's what I think helps create a robust, healthy economy, one that can, endure lots of ups and downs, one where there's lots of opportunities for employment and for people, one where there's lots of safeguards, where labor has as much power as capital, or at least more power than they have today. Yeah. And I don't want to see a world dominated by a few monopolies. I think that's a bad thing for democracy. It's a bad thing for capitalism. Even if you love capitalism, which I like parts of it, there's parts I like. And so my broad position is that that's not for me from a macro perspective. And then from a micro perspective, I mean, David, if you and I start a company, I want to know that our odds of success are not 1 in 1,000.
Yeah.
That's just awful. Going in, realizing that and more realistically, I should say 1 in 100. It's not quite that bad, but still, I don't want to see 99 founders,
Yeah. It's its own constraint on innovation, right? So
the times when innovation is greatest is when there is high market competition, lots of people vying to do the same sorts of things. And that requires not a model of one monopoly dominating a space. So yes, from a micro perspective and from a macro perspective, none of these things are things that I want. And this feeds into the philosophy that we have around chill work, because what we want to build is a profitable, long-term, high odds of lasting decades business. And that means I can't do what I did at Moz. I can't work crazy hours and insanely hard for, whatever, 12 or 13 years and then burn out to the point where I'm so depressed that I'm coming to the office and ruining the mood for my entire team, and having terrible thoughts and tanking my own business. I can't. I need to operate in an environment where for the next 20 years, I love getting up in the morning. I love the job that I do, and I do it 4 or 5 hours a day. If I need to, and if I need to go on vacation and take a break from it, that works great. And my co-founder needs that too. He's sort of the primary caretaker for his 2 daughters. His wife works full time out of the home. We both work remotely, and because of that, Casey can be like, "Hey, I'm taking a laundry break, right? Like, I'm going to do laundry. I'm going to clean the dishes." That's fantastic. That is a life that I think technology enables. There's no reason Moz couldn't have been that, except for the incentives of our funding structure. And there's no reason SparkToro can't be that. So the idea with SparkToro is we raised money. I didn't have the funds to, fund it myself. So we raised money from 36 angel investors who put in 1.3 million. And our goal is pay our investors back, which we're actually just about to do. We're only a few months away from paying them back, which is incredible.
Great.
And then we all get to participate in profit sharing to the degree of our ownership in the business for the next 20 years, I hope, right? We never have to sell the company if we don't want to. We never have to be a $1 billion company. My hope, David, is that if you invested in SparkToro a few years ago, next year you get your money back. And the year after that, you get 50% of your money back again. And the year after, another 50%. And then again and again and again. If you think about the stock market, right? If you have I don't know if you have a stockbroker or you do stock trading or whatever, but there's growth stocks and then there's dividend stocks, right? You put money into whatever, 3M, and they pay you a dividend on your investment every year. Where is that in the startup world? Why doesn't that exist? You can build a profitable tech company. It should exist. And so what I hope with SparkToro is that we're carving a path through this sort of weird forest of startups that lets people follow and say, gosh, maybe I don't need to work that hard. I just need to design my business intelligently to be able to support the life that I want and be profitable for a long time. And I can still be a great investment for the right kind of investor.
That's sort of great. And what a great way to end. Rand, thank you so much. I really can't thank you enough. It's been a great conversation, and we're definitely going to have you back. I very much appreciate it.
I can't wait, David. That's I love chatting with you. I love talking about this stuff. You can tell I have a lot of passion around these subjects.
Absolutely.
So please, anytime.